Why is it that the people making the rules are always the ones that are winning the game? In this episode, I'm joined by Dave Weisberger, a quantitative finance expert who spent 40 years inside the biggest trading firms on Wall Street. Together, we pull back the curtain on why the current financial plumbing is not only failing you, but is also becoming obsolete, and why Dave believes the only way out is a fundamental rewrite of the rules. Got Bitcoin? All right, let's dive in. Dave Weisberger, welcome to Bitcoin for Millennials.
Thanks for having me.
Yeah, thanks for coming on. I heard that you lost your X account, but recently joined X again, and I think that's when I came across your feed. And I have to say, you have amazing takes. And then, on Bitcoin finance, macro, and then I dove a bit more into your background and realized you spent 40 years on Wall Street. And so the first thing I actually wanted to ask you is, when the average person looks at the stock market and feels like the game is kind of rigged against them, are they crazy or are they right?
Well, it depends on what you mean. So there's two very different questions. There's the question of are there aspects of the stock market, bond market, really the derivative markets that are where being closer to the situation, you have an advantage. And so there are advantages in various places. That could be in terms of stock selection. That could be in terms of information. I mean, like obviously Congress, their insider trading and their track record just blows Warren Buffett away. So you know that they are the ultimate insider. So insider information clearly makes a market rigged, if you want to look at it that way. Similarly, if Wall Street has a analyst that is going to move markets and they tell their best clients first, that could move markets. Those are the sorts of things. That's not what people talk about. What people constantly talk about is complete crap. So Michael Lewis wrote a book called Flash Boys, which everything he said was true at some point in the early to mid 2000s, but by the time he wrote the book, it was all not true. In fact, he picked somebody, Brad Katsuyama, who was working at a firm that had the worst technology on the street, and as a result was getting taken advantage of by firms who had better technology, but virtually all the good firms had good technology. And so it created a distorted picture. So when retail goes to buy a stock, they're paying microscopic spreads, and they get instantaneous liquidity from market makers. So the game is not only rigged against retail. If you talk to an institutional trader in the stock market, they will tell you the fact. The fact is the market structure is so biased towards small orders and against big orders that it's the opposite. The retail gets, because it's profitable to trade against them, and I'll explain why in a heartbeat if you care, gets so much of a better deal than the institutional trader at Fidelity or Janus Capital or Wellington or whatever. And if you talk to any of the big traders, they'll tell you that. They'll say that they're always worried about getting front run by retail and or by other traders, and then the market makers who are catering to retail can screw up markets for them, et cetera, et cetera. So that notion that the stock market is rigged is a bunch of bullshit. There's a lot of people who looked at what happened with GameStop, which I actually find funny because I really enjoyed. I thought that Roaring Kitty and his crowd outsmarted Wall Street. They didn't even conceive of the notion of value from a community, and that GameStop had a lot of potential if they actually monetized it. Now, whether they will or not, I mean, who the hell knows? They still haven't, but they might. But they conceived of it. And so Wall Street definitely sold it down too far. And then they crushed them by virtue of the fact that the people who shorted it didn't know what they were doing and got themselves way too levered, and they liquidated them. Now, any good trader understands liquidation. You understand risk. And if you don't understand risk and you're trading in that size, you deserve to go bankrupt. And that's exactly what happened to Melvin Capital. They had no clue. Yeah. But what happened there had nothing to do. People blame Citadel, and it's funny. I mean, Citadel does all sorts of stuff, and I know these guys really well. I've known the person who runs Citadel Securities as a personal friend. I know a lot of the people there. Citadel does not make money from a stock going up or down. They don't take that risk. Citadel does have exposure if their clients go bankrupt, but the truth is, even there, the system tends to bail out the market makers. So what actually happened was DTCC, the depository trust company, the company that basically is the underlying underpinnings of the market of settlement. I mean, they settle quadrillions of dollars of trades. I mean, this is a monster.
Which is basically the entity that holds the stocks.
Exactly. They're
right?
the only ones. The entire equity system is based on paper in a vault under 55 Water Street, where my first job on Wall Street was, believe it or not. And everything else on there is in their systems. What they did is they called up Robinhood and out of the blue said, you know what? You posted this $1 billion worth of collateral, whatever the number was. You know what? It's riskier. We're going to do a margin call on your collateral posting. And so here's what you need to do. So Robinhood was put into a rock and a hard place. There was nothing they could do. And people blame them all the time. And look, there are things that Vlad did earlier, years ago that I don't agree with. And maybe even the way he handled this, because he was a little bit standoffish at the time, wasn't communicated very well. But the truth is they put, to use the vernacular, his nuts in a vice and started to squeeze. And there was literally nothing he could do. He didn't have the capital to be able to do, they basically held him hostage and they changed the rules on him. But retail has this thought process that it's rigged. The answer is, I guess to an extent, if something really extreme happens, the powers that be will do what they did to Robinhood, but they're blaming the wrong people. Yeah. It's really more the banking lobby. Now, the banks do all sorts of things that are against retail, such as paying virtually no interest on checking accounts. And then the only way you can do payments is from checking accounts, making it take days to move from one asset to another. So there is a lot of game in the system, but it's not in the stock market. Probably more of an answer than you were thinking about, but it's a topic I know extremely well. Just so your audience knows, I built a company called 2 Sigma Securities that competes with Citadel. So if I wanted to say bad stuff about Citadel, I would have all the information. I have no interest in doing so, but I also wouldn't apologize for them if they did something horrible. Like, for example, Jane Street, which I'm sure you're going to ask me about. If, in fact, the allegations look damning to me about what they did in Terra Luna are true, there's no way in hell I'm going to defend those actions or anything else that's happening. So I'll leave it there.
I think that's a great layup, actually, to kind of like the bridge I wanted to take towards Bitcoin. You obviously spent your life studying how money moves. You've been into this. You now say that Bitcoin is a architectural fix to this broken system, but what does it mean? What does that mean? Like, what is broken about the way that we currently store and use money, and where does Bitcoin come in?
Well, let's be clear. Bitcoin is a potential fix to that system. Bitcoin needs some maturation to get there, and we can talk specifically. We'll put a pin in that for a heartbeat. But let's just assume that all we're talking about is the base layer of money. Right, the base layer of money for a couple thousand years used to be in most places seashells. Right, people saw seashells; they were pretty. You could wear them on necklaces, but they were hard to find. It wasn't easy where they were. So it became a unit of exchange. The Indians called it wampum. It happened all over the world, right, in different places. There's other forms of money. Eventually, people realized, however, the seashells weren't very rare, and you could find them much more easier than you thought. And so they wanted to come up with something else. Well, what was the next thing they came up with? They came up with precious metals, gold and silver. Gold and silver are predictably rare, relatively easy to verify one way or another, gold in particular, silver a little bit harder back in the day, but pretty easy. They were divisible, they were portable, you could use them in commerce, people understood what they were worth, and so that became a base layer. Now, why is there a need for a base layer? Well, without a base layer, the government has the incentive to spend far more than they collect in taxes, and they will spend and spend and spend, because if you're a politician, what's the easiest way to get votes? Give shit to people.
Yes.
Spending other people's money. The most common example, and it's always used, is guns and butter. That's an old expression, but it's effectively, it was swords and plowshares as well, back in the day. If you look at the history of money, one of the funny things, and I don't have coins on me right now, but if you look at a quarter or any U.S. coin, there's ridges on the side, except for the nickel and the penny, but the quarter has ridges on the side. It is a homage to the fact that Roman coins had ridges on the side. Why did Roman coins have ridges on the side? Well, because the Roman government was running out of money. And so they literally clipped the sides of the coins so that they weighed less and you had to have less gold or silver in the coinage. And so governments have been trying to debase their own currency basically forever. And that's what you're seeing with regard to money. So why is Bitcoin affixed to a system? Well, in 1971 was the culmination of a move that started in 1913 with the creation of the Federal Reserve. Nixon closed the gold window. Now, he had to, because there was an idea that even though individuals could not own gold, individuals couldn't demand, other countries could. And so the U.S. had the Vietnam War and the Great Society, the first big set of welfare that was happening. And they couldn't afford it. And then, given the fact they couldn't afford it, the money was leaving. And so the money was leaving the system, and he had to close the gold window. And from that point on, in 1971, the fiat era was born. From that point on, there was no longer a single currency in the world that was backed by anything fully. The U.S. claimed to have a large backing in terms of Fort Knox, but they still haven't done an audit. No one really knows what they have in Fort Knox. But even if it had everything they said they do, it's still a fraction of the total U.S. Money in circulation.
When it comes to holding Bitcoin securely, peace of mind starts with architecture. OnRamp's multi-institution custody model distributes control access across 3 independent regulated key holders in a 2 of 3 multi-sig quorum. No single point of failure, no pooled or omnibus exposure, just segregated client-titled vaults. You retain full legal ownership while OnRamp coordinates security, compliance, and operational workflows behind the scenes. Multi-institution custody is the foundation for everything that OnRamp builds. Sound infrastructure that distributes counterparty risk and provides fault-tolerant resilience with clear audits and institutional controls. And now OnRamp is piloting flat, predictable pricing to make best-in-class Bitcoin custody and financial products more accessible than ever. Visit onrampbitcoin.com to learn more and sign up with code BRAM, that's BRAM, to receive $150 in Bitcoin after your first deposit. OnRamp, strength in many, simplicity in one.
When you look at what's broken in the system, when we talk about fiat money, what you're saying, and why I am a Bitcoiner at my core, because I started as an Austrian monetarist, is when you continue to print money, that means that the value of that money per unit has to keep going down. Well, when the value of the unit of money goes down, that means the stuff you buy with that money goes up. Now, what's fascinating about this is most economists are dumb. And they basically say, well, but there hasn't been much inflation, so that's okay. Now, I look at this and I'm trying to figure out how PhDs, who you think would be smart people, can say something so incredibly stupid. Because you can't look at a sliver of the stuff you value dollars in and say there's no inflation. I mean, Milton Friedman famously said inflation is and always will be a monetary phenomenon. He's right, of course. Mm-hmm. But here's the difference. You look at consumer goods, which have lots of inputs to those consumer goods, many of which have massive deflationary impacts from technology, productivity growth, et cetera. Just look at the cost to extract a barrel of oil. Cost to extract a barrel of oil is, 25 or 30% lower today than it was 20 years ago? Mm. And that's not even adjusted for inflation. That's just in flat out dollars. So adjusted for inflation, it's even more than that. We've just built a much better technology. So what do I mean? What is Weisberger talking about when he says that the economists are stupid? Well, the answer is, add to the picture of what you're valuing money at, assets. And now look at the price of homes, or look at the price of the average stock, or look at the price of an ounce of gold, or look at the price of basically anything. When you take assets into account, inflation has been raging since 1971. Yes, there's been ups and downs in different assets for sure, but just do the math. And if you start looking at the correlation of assets to the devaluation of money, it's a pretty damn good correlation with lots of wiggles depending on what type of asset you're talking about, because stocks will do better one period and, et cetera, et cetera. So my point, Bram, is that inflation, and if you look at from a policymaker point of view, policymakers look at this and they lick their chops. Up until recently, policymakers said, if I could push, and this has been going on for 40 years now, this is since Reagan, if we're going to create inflation and I could make people feel wealthier by making assets go up, and the people even who don't have assets make the cost of consumer prices not go up very much or even go down, I'm a freaking hero. And so that's been the policy of governments across the West for 40 years, And while the governments aren't that dumb or aren't that smart, they managed to get that right. So by keeping interest rates below market interest rate levels, they've managed to do that by encouraging, if you're in the U.S., encouraging outsourcing, right? Encouraging automation beyond what would otherwise make sense. They've managed to make this even worse and accentuate this trend. That's why people who have houses have done so well. But what's the problem? Well, the problem is that the next generation, the millennial generation, and in particular the Zoomer generation, are can I curse on this show?
Of course. Yeah.
They are fucked. Why? Because asset prices have been going up at the same time as wages as a percentage of GDP have been going down. And so we get what's called the K-shaped economy.
Yes.
And that is a direct result of bipartisan policy going back 40 years. And every time a politician talks about this, they ignore the fact that both parties have been behind this for 40 years. In fact, the first politician I ever heard talk about this live was J.D. Vance. First one. I mean, I'm sure Trump was told to talk about it later, but J.D. Vance was talking about this when he wrote Hillbilly Elegy. So he recognized this problem. He's the first one. Now, people crucify him for all sorts of stuff, but the truth is he at least recognized it. And so that is the fundamental issue. I don't know if that's the answer that you were looking for, but yes. Bitcoin, which is a provably scarce potential store of value. And so with a provably scarce store of value, it makes it way harder to get away with just printing money, making assets go up, because you'll see it. And if you denominate everything in something that's provably scarce, the real asset won't be going up. It'll be staying flat. And consumer prices might go down relative to because of productivity, et cetera. So you can live a good life, but you can't continually pump up assets. Yep. Continuing to pump up assets has proven to be a very, very good way for the elites to make themselves richer relative to everybody else. And so Bitcoin as a fix for that, it can grow into that. Now, for that to happen, it has to grow substantively, but it certainly has the potential to be a fix for that. It has the potential for people to opt out of that. But because Bitcoin, like everything else, will appreciate as the money supply goes up. The difference is with Bitcoin is right now, Bitcoin is really undervalued compared to that succeeding. So if you believe it's going to succeed, then you want to own it with both fists because it's a chance for generational wealth. If you think it's going to fail, well, yeah, it might drop. I don't know. It may stay a niche product, et cetera, but it's an asymmetrical return. And that's why people are into Bitcoin. That's why I am into Bitcoin for that reason. Yeah.
I call Bitcoin an asymmetric opportunity based on publicly available information, right? Like it's all there, but you need to figure it out, right? And before we go to your take on Ray Dalio's take that we saw on the day of this recording, I do want to see if we can create this bridge, because what I find super interesting about what you're saying is it is almost like a clash of certain types of philosophies, but also there's like basic thinking and there's like pretend wishful thinking or something that's also in the mix in some way, shape or form, right? And when you talked about, the history with like the Roman coins, etc., the whole idea of the coin clipping was to slowly siphon away value from the individual units, right? And in the shadows, so to say, create more units so that the people that were in charge and were able to also abstract that, right? They had more spending power, right? They were at the top of the pyramid and they could spend that money first on stuff that they wanted. Now, arguably, they probably spent it on some stuff that people also wanted just to, keep the people in check. But they also went to war, and you could say, well, that brought them, more of the empire, etc. But what the history is showing us is that there is a definitive end to the practice of coin clipping or just creating money.
When people get fed up. I mean, look, there's two effects that are going on here that people talk about. The first one I'll mention is the Cantillon effect. So the Cantillon effect says the people closest to new money capture a disproportionate share of that new money. Yes. The second concept is inflation is a stealth tax. It's not really all that stealthy. It's a tax. It's a tax on the average person who doesn't have the assets. So you combine those two things, you can see what a powerful engine of modern feudalism it becomes. So apart from the select few who build new companies and create new wealth that get into the elite system, what it tells you is the average human is effectively being, turned into serfs in a financial world. They have more rights. I mean, you're not stuck to a particular plot of land. You don't have a knight who could come in and rape your daughter with impunity. I mean, okay, so it's not quite as bad as in the feudal system where the knights and the lords had absolute power. But the truth is, it's financial feudalism for sure, and it's a combination of inflation as a tax and the Cantillon effect that's causing it. Yeah. The thing that Bitcoiners look at is they say, well, listen, the gold standard failed because the gold standard is gold just really doesn't work in a modern digital economy. And I don't want to hear the notion, well, you can tokenize gold. It's like, sure, but you still got to trust men with guns guarding it.
Exactly. Yes.
And you still have to trust the fact that it's real, that it hasn't been counterfeited, and you still have to be able to move it, store it, etc., verify it. Those are things you cannot do with very easily, and in fact, it doesn't scale very well. Bitcoin does. Now, we could debate whether or not you could have credit layered on top of Bitcoin or gold, and I come down pretty firmly on the point of yes, you should be able to do that for a lot of reasons, in terms of monetary business cycles and lots of stuff. Caitlin Long likes to call me a Murray Rothbard or Rothbardian, because I believe in that. That's fine. I'll take it. I think he was a fairly smart dude. But the fact that Bitcoin has that ability, if it gains a critical mass of acceptance, makes it singularly unique among assets, and so that's why I am into it. But that's the answer to your question.
Well, that's where I wanted to go, right? Because eventually it is about as long as people, and that is the majority of people, not the people in charge, right? As long as you accept this debasement by, other people know better than you, they automatically have this control over you in a sense, right? And because it is so obscured and abstracted away, and no one ever really teaches you about this, right? Especially, I always say, like in the Western world, you don't really notice it, right? Because money just works, especially in the early stages of fiat money. You could just create fake productivity. You could build stuff. It seems like you're growing. Everyone has, nominally has more money units and all these things, right? So it looks really good, but the fact that there is no forced transparency, right? It's all a trust me, bro thing. Like I'm the right? Like I'm the politician now. Listen to me. I'm the treasury secretary or whatever. Where Bitcoin comes in, I would say that's why I use forced transparency. It's very, very simple. It's you either have it or you don't. That's one, and two, right? So if you would abstract, create products on top of it that are an abstraction of it, right? Like you can do the same TradFi game on top of it, but not as many layers as let's say in 2008, for example. Like you would blow up quicker because you you have the Bitcoin or you don't, basically. Plus, there's all these other characteristics that you mentioned, right?
You're conflating a lot of stuff there. I mean, we could talk, and actually one of them is extremely important to talk about as you're talking about crypto and where it is Bitcoin, which is the difference between the banking system and fractional reserve banking and fully reserve banking. And it's which is a very big topic today, given the stablecoin stuff and what's going on with the Clarity Act and what that is. And that is absolutely worth talking about. You're conflating that in a sense with what happened in 2008, which was very badly mispriced risk based upon an asset. Was, my God, my dog is smarter than these bankers at Goldman Sachs. Now, why did I think that? I thought that because I realized that these guys are using financial models that had not factored in a recession. Didn't understand that if you took 20 different shopping centers in a non-recessionary period, they will look the same. They'll look the same. They'll look the same. They'll have the same risk profile, etc. You kind of know that, and you'll see some differences, and so they say, oh well, clearly I'm diversifying this risk because maybe some tiny percentage of shopping centers went under during that period of time that they were looking. But if you go back to a recessionary period, and then you figure out, oh my God, they really are the same. They all fail when we go into a bad situation. And so you have this illusion of counterparty risk not being the same. And so you create this vehicle that is just dramatically underpricing the real risk. Now, if you want to understand what happened in 2008, it was a dramatic underpricing of the real risk. So people started to figure this shit out and would take deals that they didn't like, and they would price it super aggressively to the point where they made no sense, confident in the fact the Citi would swoop in and outprice them and take that crap on their balance sheet, which is why in 2008, Citi was undeniably bankrupt. Completely bankrupt, bailed out by the government in a variety of ways. Never went under because they were bailed out, but they were way underwater in all their investments. So because of this, but anyway, there are these two. The core of 2008 was underpricing risk.
Yeah.
In Bitcoin, that never happens. Even in the case where people take out loans against Bitcoin, they get liquidated if they took it out. If they took out too much risk, the market's brutal. If you take a 50% loan to value on Bitcoin and you took it out at 126, you got liquidated, period.
Well, this is my point. This is my point, right? Like the point is with Bitcoin as this collateral, you can try to play a classic game, but it just won't go too far because
it will to you, but the system will not have risk. There's a word for this in the financial system. 2008 proved it. It's called socialized losses.
Mm-hmm.
So they bail out firms rather than liquidating them.
Yeah.
And the net of that is the entire economy has to bail them out together. And so that's what happened with the banks. And that's why it's actually unconscionable that the banking lobby still has so much power. Because a large part of what they're doing in this whole stablecoin debate is saying that yield on stablecoins will be bad, we'll lose deposits, yada, yada. But what they're not telling you is because of the 2008 crisis, they're able to park trillions of dollars at the Federal Reserve and earn market interest. So their buffer against risk earns market interest. By the way, that market interest is, between 3 and 4%, depending on how you want to look at it. And they're paying on average on checking accounts, less than 0.5%.
Yeah.
So that is a pure subsidy to the entire banking system that came out of 2008. That was the largest part of the bailout. Everyone looks at the TARP. They got $1 billion, whatever the hell they got, $1 trillion. It doesn't matter. These guys have been getting hundreds of billions for 2 decades almost.
To keep it working, right?
To keep it working.
Yeah.
It's an almost insane amount of subsidies. It's literally so far, and yet that's the situation. But whatever. The point is, with Bitcoin, it would be all very transparent. You would see it.
Today we saw Ray Dalio in an interview talk about how Bitcoin would never be bought by central banks, right? Because it is too transparent. It's very funny, right? Because if you would argue that trust in a financial system is very important, using Bitcoin as your underlying layer of value would be the highest signal of trust, I think you could signal. But he says, it's too transparent. What are we kind of seeing here? Or how do you experience, seeing someone of Dalio's stature in the sense that he has played this fiat game. He's good at it. He knows the bigger picture, meta, macro, all these things, but he's totally wrong on this Bitcoin part. Well, should it stay obscure or should it be transparent?
Okay, first of all, he's half wrong. Let's get this right.
Yeah.
If you're talking about will the Bank of China, will the Federal Reserve, will the European Central Bank, will the Japanese Central Bank, will they adopt Bitcoin on their balance sheet? The answer is very, 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 very unlikely until Bitcoin is dramatically a larger asset. Right now, it's not even remotely in the conversation. Now, that's not to say the sovereign wealth funds of any of those countries might not be accumulating Bitcoin because it's a really good asymmetric bet. But, like the Treasury might do it for different reasons, but not the central banks. Central banks want a stable asset. That's the big central banks. And part of what they want, a stable asset, even what they're doing with gold, you don't know. They're all being opaque because they don't want anybody to know what they're doing. But all central banks are not created equal. So look at Poland. Poland wants the entire world to know that they've been the largest gold buyer. They want the whole world to know. They want it to be clear, right? Because they want people to know that they want their currency to be stronger. They think they're doing a really good job. There are many central banks that have been acquiring gold that have been very, very, very transparent about it. There are 23 sovereigns mining Bitcoin that they want the whole world to know about it. So when Ray Dalio is talking, he does what a lot of people in financial markets do. They focus on the largest. So you talk about what's the market structure for equities, they look at the S&P 500. They don't look at the other 14,000 stocks or the other 3,000 stocks in the national market system. In the case of Ray Dalio, he's talking about the largest central banks, and he's right. They're not going to adopt Bitcoin until they're forced to. But they won't adopt Bitcoin until it's up by a factor of 10 to 15 at a minimum. You don't look at them for they will create the last mile. Bitcoin will go from approaching digital gold value 10 to 15 times here to being better than gold when those central banks start adopting it. But they won't adopt it until they are forced to, because the market says, this is important in a way to value your assets.
For my European friends that want to buy Bitcoin with ease, check out Relay. I've been a longtime fan and happy to partner up with what I think is the best Bitcoin-only platform for Europeans. They offer a super simple, beginner-friendly app with no distractions and no shitcoins. You can do a quick one-time smash buy or set up automatic purchases when you're stacking regularly. And here's the thing that matters most. Relay is 100% self-custody. Every set you hold is yours. Your keys, your coins. If you want to get started, download the app via my link below or in the description and use code BRAM, that's BRAM, at checkout to get 10% off your fees. A huge shout out to Relay for sponsoring the show. Now let's continue.
But when you look at the other central banks, the same ones that have driven gold from less than 2,000 to over 5,000, and I'm using those numbers because you need to understand, gold buying from the central bank, yes, some of it is probably from China, but they're not telling you. The others is from a lot of these other smaller central banks that have been voraciously buying gold and selling U.S. treasuries, or not buying U.S. treasuries to replace it. Those countries are much more likely to be willing to buy Bitcoin. Now, the second part where he's half wrong is you can absolutely obfuscate what you're doing with Bitcoin easier probably and cheaper than you would in gold. In gold, if you want to take physical delivery, there are big honking airplanes, men with lots of guns yes, that are protecting it. It's a lot easier for people to figure out what the hell is going on. With Bitcoin, okay, you could buy on exchanges. When you're buying it on exchanges, nobody knows. Right? The exchange has the information. You buy it in a bunch of different places. You take days, weeks, or months to siphon off 10, 15, 20 Bitcoin at a time. It's really, really easy to move smaller amounts of Bitcoin and accumulate a stash. What's hard, and why terrorists have a problem using Bitcoin, is it's really hard to sell for large amounts of dollars without it being really clear where the Bitcoin came from. But it's really easy to take dollars and turn it into Bitcoin. It's really hard to take Bitcoin and turn it back into dollars. And so this notion is just wrong. I mean, it's like, and the other point that he made is, and Chamath made this point, which is stupid, is Bitcoin is not fungible because you can research what you want. It's like, I'll ask you this question. Have you ever heard of a single human being or company that has ever had a problem, if they were a legitimate company, an investor, mass hedge fund, anything, in the financial system, ever had a problem because they bought Bitcoin on an exchange and it turned out that Bitcoin was, quote, tainted by virtue of, came from a bad wallet? Have you ever heard of anybody having?
No, but I also think two things. Like one, you can, there's stuff like CoinJoin and you can build infinite technology on top of Bitcoin. I think that is one. And two.
So you're agreeing with me?
Yeah, I agree. But it's also a weird way of saying, well, it's okay that when you have dollars, you don't know if it was used in a drug deal or whatever. Like, I don't understand. The counter argument is nonsense.
You're reading my mind. You're reading my mind, Bram. Because my response to this asshole on X who was trying to say this stuff was, listen, somewhere, I don't know what the number is now, but a few years ago, it was 90% of the $100 bills in circulation was tainted by cocaine. Yes. And I guarantee you, if I walked into my poker stash, which isn't huge because you can use electronic now, so you don't have to do it that way. But if I walked into my poker stash and I pulled some $100 bills and got them analyzed, my guess is I have some cocaine fragment somewhere sitting in one of my safety deposit boxes. I guarantee it. But it doesn't matter. right? You know, it's like the fact is it doesn't matter. This notion that Bitcoin isn't fungible is just stupid. Of course it's fungible. It's not. They're not NFTs. They're not non-fungible tokens. They can be infinitely divisible and then almost infinitely, and then brought back together. It doesn't matter. And so the entire notion of this attack vector is coming from Chamath's point of view. It's because he's pumping Zcash, which is. We could go down that rabbit hole. I'm going to ignore it. But let's just say that this is a man who quite literally, I get Grok, do the analysis for me. Quite literally, he and his company made $750 million over the last decade or more or less, promoting SPACs, special purpose acquisition companies. They were the average loss to the investors, and it was for multiple billions of dollars worth of SPACs, was between 70 and 80%. So this is not someone I'm going to listen to, or that anybody should listen to in terms of his advice. The reason people listen to him, they say he's rich. How do you get rich? By scamming people. Okay, good, great. So you're going to listen to someone who made his money by scamming people. That's what passes for integrity today. Wonderful.
Yeah. We discussed partially, I think, the risks that are just inherent and fundamental to the current financial system. Another thing that Ray Dalio said, which is funny because he is famous for his risk management frameworks, right? And then he cites quantum computing, privacy concerns as reasons to dismiss Bitcoin. You called that nonsense. You also spent. It's 40 years, right?
You got to. First of all, the privacy concern. His concern about privacy is that people wouldn't have any, because it's so easily verifiable. Yeah. And I just told you that it's really easy to be private about your wallets. Very easy, actually.
But it's theoretical risk versus actual already existing risk in the current financial system. I don't understand how. I don't know if that's the old guard or something like. Why are people projecting theoretical risks on something that, on the other side has just better characteristics than anything that already exists? Plus, these existing assets and systems have fundamental flaws that Bitcoin doesn't have. So I don't understand why they are not putting these things together.
Well, okay. So let's talk about so the risk framework stuff. So let's talk about the two things you mentioned. The privacy is stupid, but let's talk about quantum. So the easiest way to think about quantum is there's two flavors of, quote, risk. There is the risk to the old wallets that can't update, because the thing that people are most worried about quantum breaking is to be able to look at a public key and derive the private key, the hashing function that underlies that. The easiest way to fix that is by obscuring the public key or rotating the public key, and so not reusing, etc. There's other enhanced hashing algorithms that could also do it, but all these things can be protected. The most aggressive estimate I've seen is that 30% of Bitcoin's supply is therefore vulnerable. So that's the first piece of risk, and we're going to get back to that in a heartbeat. That is, we can all agree that if 30% of all Bitcoin that hasn't moved became excess supply and became on the market, that is not an existential risk to Bitcoin. It is, however, a supply-demand risk that is not insignificant, but not that big of a deal. Because, and I will talk about why. Let's just talk about why now. Why do I say that?
Because the coins could hit the market, right?
Who gives a crap?
I don't care.
No.
So I don't understand.
The fact that Ray Dalio is worrying about that is stupid, and he knows better. The 7 most valuable companies in the world today all gained their value during a period of time when their free float went from 10% to 80 or 90%. That's not going from their free float going from 70% or 65% to 95%, because that's what Bitcoin would be doing. So if Amazon can go from where it went, or Google, where the current founders, or Facebook, I think Zuckerberg has well less than 10 or 15% now. The fact that 30% moving from insiders into the market didn't derail their dramatic value increase, and as a group that all happened. Why would anyone believe that would happen to Bitcoin? And the answer is they don't, because they don't know markets, or they exaggerate. They have this fantasy that if all 30% came on the market, the people who spend all this money to build the quantum computers to do it would then say, you know what, I was just kidding. I didn't want to make any money. I'm going to dump it for zero because I was just kidding around.
Yeah, it makes no sense.
The only reason they would do so is something that could put them in prison.
Mm-hmm.
Right? Is if it were a quantum hack, you broke into a Satoshi's wallet. And instead of selling it slowly, methodically, or on a bid to raise the billions of dollars it would be worth, i.e. not hurt the market price, you decided to tank the market by selling it all stupidly. There's only one reason you would do that. And that's if you are able to put on massive short positions in derivative markets. Well, if you did that and you got caught, you go to prison. Because that's considered market manipulation of the highest order. That takes anything that even Ivan Boesky or any of the various people who've done insider trading over the years and puts it to shame. They would get them. It doesn't matter that it's not a security. It would be under fraud laws. They would get them. And so the notion that that's what is the idea is just silly. When you can steal what is that amount of money and do so legally and then have that amount of money and be that rich, you're going to use that wealth and you're going to maximize the price of Bitcoin. You're not going to minimize it. So the notion that it's an existential risk is just flat stupid, okay? And the magnitude of the risk is not that existential at 30% of the float, right? It just isn't, because we've seen it. You can go back and look at the math of all these things.
But you could argue if the market just buys it, it would actually be a good thing for Bitcoin, because then it's over.
There's also a very, very high likelihood this will be prevented. That the consensus of all the people who are voting in the Bitcoin community that have mining nodes, etc., will basically say, you know what, we're going to do something. Whether we freeze the wallets until they can be upgraded so that nothing can move, and so we won't verify any transactions. There's a lot of different ways they could handle it. So that's the first thing. It's not an existential risk, even if the Bitcoin community stays flat-footed and divided and stupid. But assuming that you believe that money talks and bullshit walks, then people like Coinbase, which are funding research into quantum, and MicroStrategy, which is funding research into quantum, they will come up with forks that will be able to make it resistant, both for old wallets and for new. Now, the other piece of it is the theory that beyond just the old wallets, that the entire encryption thing of Bitcoin could be cracked, which is far further in the future. That 100% certainly could be fixed because the technology could be upgraded. And there, the incentive to do so is sufficiently large that, honestly, I'd say the risk of finding an asteroid that would quadruple or put a factor of 100 to our gold supply, or the fact that the Hadron Super Collider can now create gold molecules, is a bigger risk than the risk to Bitcoin. So I find it amusing that we go there. But, look, it's entirely possible that he'll be right in some sense, in a way, but in a correctable way. And I give credit to Nick Carter for being the one who brings this stuff up, because he's right. If people put their heads in the sand and they don't research it, they don't understand how important it is, and you're not talking about it, then if something does happen, it could create a major shock. So it's great that he's pointing this out. But the fact is it is fixable. It's a solvable problem. So this notion is that central banks won't do it. Now, central banks aren't looking at that. They're looking at the acceptance rate. Bitcoin is way too small for central banks.
Whenever I hear, someone like you talk about it in this way, I just have to smile again and just think like, oh, it's so early, right? Because I also think the kind of like, I don't know, it's kind of like a doomer take, right? Or a very negative take of what Dalio is taking. I just think it's boring because, like you're explaining, there's a lot of depth behind it that you should explore before, especially in a position like Dalio, where he knows a lot of people are going to listen to him, right? You take that position. So either he's not interested or he's not that smart, right? I think it's always so funny.
Well, no, he's quite smart. And
yeah, he is smart, but I mean, there's so much depth.
Incentive. He could have made that interview so much smarter. All he would have to do is say, central banks are not going to be the catalyst for Bitcoin. The big central banks won't touch it until it's dramatically larger, and so we shouldn't really worry about it. And smaller central banks are touching it, but they don't matter. He could have said that and basically said that all the Bitcoiners who are worried about central bank adoption to be the catalyst are out of their mind. And he'd be right, because that's true.
And I like that. I think that's also...
It's accurate. But what he said was ignorant. And, look, even the smartest people are ignorant on certain subjects. God, there are many things I'm ignorant about. Like, you could ask me a question. There are questions you could ask me that I would have to say, I don't know. I mean, don't ask me, how to try, what the foundation of Shor's algorithm is. I don't know. I mean, I understand roughly how it works, but I couldn't tell you a damn thing about it, right? I am not going to describe how public-private key cryptography evolved because it's not my expertise. My expertise is trading markets and market structure, right? That's what I understand better than most. But, there are many things I don't understand. When you step out of your zone to actually answer questions based on what other people have told you, which is inevitable in those sorts of wide-ranging interviews, the chances for mistakes increase. So I chalk it up to that.
If you have to explain the big idea of Bitcoin to someone who thinks it is risky or a bubble or a Ponzi or tulips, what would be your approach, or what is your approach when you talk to people?
Well, I've done this in video form, and last week I wrote it in article form. I've actually answered the question. So Bitcoin right now trades like an option on its own adoption, full stop. And you can look it up. I can send you the link afterwards.
I like that.
You post it.
Nice. Yeah.
Bitcoin trades like an option. As a result, right now, its volatility profile is such that it is going to trade with high volatility and look a lot like a tech stock, could be a risk asset. If it gains critical mass, it will rapidly ascend to becoming digital gold, at which point its volatility will decrease and its correlations will change. The notion that people don't understand, anybody who's ever run a quant trading group, and just so your audience understands, I ran stat arb trading for Citigroup, and I ran 2 Sigma Securities. Meaning that I have a decade of time building quantitative models that assess risks, etc. And if there's one thing you know about correlations among assets and the beta, the magnitude of the correlation among assets, is they are notoriously unstable over time. They change. And so anyone who has this idea that Bitcoin must be tech stock, it's like, well, it is trading like a tech stock today. And you could read through the article to understand why, but understand that right now the market is pricing the odds of Bitcoin becoming digital gold or more at less than 5%. That's the truth. So that is the kind of thing, if you look at the volatility on Polymarket of anything where there's a 95% yes, and how fast that moves, Bitcoin's moving slowly compared to that kind of stuff. But yet that is those are the numbers. Those are the numbers. And so if you believe that Bitcoin has a better than 5% chance of becoming digital gold into the future, if you think it's 25 or 30, you're getting 6 to 1 on your money. Now, I don't know about you. I tend to like bets that are 6 to 1 on my money, or 10 to 1 on my money. Mm-hmm. And that's how I view Bitcoin. Now, that's the sheer numbers. The why becomes really interesting. People don't understand. Everyone who says, well, what about XRP? Or what about whatever, Zcash? XRP was created by a company, still controlled by a company, still benefits that company. Bitcoin was effectively created as an open source protocol, and the owner, the person who built it, or a group of people who built it, who goes by the name Satoshi Nakamoto, left their coin sitting there, basically not benefiting from what the hell happens. So you kind of have this unique singular moment in financial history where this thing that has this incredible supply schedule, which has worked incredibly well, the mining scale and difficulty adjustment and halving and everything, is distributed very evenly among the early holders, is open source, and anybody can own it. That dynamic's not happening anytime soon. No other coin has that, and nor could it. Meanwhile, it's powered by the world's largest computing network. If you look at the hash rate over the last 6 months as Bitcoin has crashed, it has not. Meaning price has gone down, but people's willingness to back the network and mine for Bitcoin and validate has not. What does that tell you? This is historically cheap right now. Yep. That's the easy way to look at it. Now, if you're looking at it for the long term, the question is, you start looking at the characteristics in a digital world between Bitcoin and gold, and you very quickly end up saying, well, wait a minute, Bitcoin is far better for transactability, global movement, etc. It is absolutely true that you're going to need layer 2s on top of Bitcoin, whether it be Lightning or something else, like my friend Yago's Bitcoin OS, doesn't matter. Because Bitcoin is slow. It is slow. There's no doubt that it's slow. It's a lot faster than gold, right? Bitcoin 7 transactions a second. Gold is what? A transaction a minute? I don't know. Me tap out, try to, get gold shavings off and measure it and assay it.
Well, and the bigger the amount, the longer.
When people say, well, you can digitize gold, the answer is, yeah, that's true. But you could digitize Bitcoin onto a layer 2 also. That's how Lightning works. Right? The difference is gold, you have to continually verify it and pay money to do it and have men with guns watching it. In Bitcoin, you can verify it and it's verified and it stays verified by 25,000 nodes at every single 10-minute block every day. So, you could come to the conclusion Bitcoin is better than gold. Come to the conclusion the market is pricing it as a 1 in 20 possibility, and say, I don't understand why the market is pricing it this low. Particularly when you look at the people who have made this bet. When the world's largest asset manager has made this bet and has its most profitable product be this bet, saying that it's a 5% bet, this is generational. People don't understand. This is not, look, it's not Shiba Inu. You're not going to get, 100,000, you're not going to turn $1 into $1 million. But turning $1 million into $20 million is a generational opportunity with this sort of asymmetric upside. And that's what people are looking at. So is it a get-rich-quick scheme? No. I mean, you want to do that, go pump.fun, go to the track, go to a casino, go on prediction markets and gobble stuff up and take wild-ass bets, that's fine. You want to have a portfolio opportunity that's rare in your lifetime, this is that.
Yep. Like you said, some people are seeing this. Also, some countries, governments are seeing this. They are mining Bitcoin with government resources. Why are countries doing this? Is it just about making money, stacking Bitcoin, or a national security issue? Like, how do you view this? Why are there sovereigns mining Bitcoin?
Well, I mean, you used the words before, game theory. I mean, right now, sovereigns will mine Bitcoin because they see it as an asymmetric upside bet. I have cheap energy, geothermal energy in certain cases, stranded gas deposits in other cases, hydroelectric dams in other cases. Doesn't matter. I have cheap energy. What can I do with this? Because I can't sell the energy because it costs too much to transport it. I know I can use that energy to give me an advantage and mine Bitcoin at a profit and do so in a way where I accumulate an asset that might very well be 90-some-odd% undervalued. It is a smart economic decision to do so. They can cover their costs and accumulate an asset. So you're seeing very smart players. Now, once that happens and once the critical mass continues to evolve, then game theory sets in. Then it's like, wait a minute, if this is what it's going to be the best way to back my currency and I can make my currency strong this way, much, much cheaper, this is a bet that makes sense to take. And that becomes more and more possible. This is a world where, and I wrote it, I did another article or another video, actually, this one was, in a world filled with lies, what's the value of truth? Mark Yusko from, who started Morgan Creek with Pomp, he makes the point that Bitcoin is the technology of truth in a financial system that's based on a technology of trust, and truth trumps trust. And so there's lots of reasons why people might want to be involved in the network and might want to try to make money at the same time. It's not always the same. It's not a homogenous answer, but I think that those are the continuums. Those are the sorts of things that they're looking at.
I wonder if there's also this idea of a multipolar world that comes into play where, just the need for a more neutral way to exchange value is also something that more countries just want, right? Just this abuse and the exporting of inflation.
Let's unpack that for a second, because I don't think the multipolarity has anything to do with it. I think what does have to do with it is censorship resistance. I mean, if all you're doing is relying upon U.S. dollars and U.S. dollar assets, then the U.S. government can take your assets away. And we've seen that, and sanctions, et cetera. Now, they're going to be able to sanction most things, Bitcoin included. Let's not kid ourselves. If you want to use it or spend it, it's you might be able to do something. But there is a reason that Hamas told their donors, don't pay us in Bitcoin, because the Israelis figured out how to intercept it and trace it. Right. So it's not completely clear that you get that much of a benefit there. But what does happen is with an asymmetric potential return, you have reasons to hold it. And where, at least for individuals, not at countrywide scale, you saw examples like the Canadian truckers, et cetera, where individuals benefit from the censorship resistance of Bitcoin. Governments aren't going to bother people that's not nation state oriented scale, right? They just don't, or very, very large scale. So for the average person, it's a great way to build wealth. But truthfully, most people in the rest of the world these days, they're much, much, much more concerned with protecting their own wealth in their own currency, which is hyperinflating. So when you're looking at Venezuela, or you look at what's going on in Iran, and that people are using stable coins for that. They're using dollars, to be honest. Bitcoin is a way to save, but if for money that you need to spend, people are happier to keep it in the dollar right now, unless the dollar implodes. And while the doomers may say the dollar's going to implode any day now, I actually don't think that's going to happen. I think we got quite a bit of time before that happens, unless we do something unbelievably stupid. It's what I call the Mad Max scenario. Bitcoin will probably be worth a lot more in a Mad Max scenario where electricity and computers don't disappear, but it's not a world that I necessarily want to have happen. But there's an easy scenario to see where it will be a far better wealth creation, wealth preservation mechanism than anything else on the planet without that scenario happening.
Yeah. You mentioned that Bitcoin is slow. I also think the adoption goes slow, right? Until it kind of doesn't, and you hit this inflection point and this game theory. Again, Ray Dalio, someone who should fully see it, he doesn't, right? So this shift is not as obvious as you and I might see it. What does that tell you about how much longer this kind of like status quo can last? Obviously, there's a lot of stuff happening, de-dollarization, like you mentioned, buying gold, not U.S. Treasury. So there is stuff happening. Is it just a matter of time before, views like Dalio's become obsolete, or do you think something will happen?
We're giving Ray way too much credit here. I mean, right now
Dalio like.
No, but he looks at the world as it is today. That's his job.
Yeah.
He's not a futurist. He's not trying to tell you what the world's going to look like in 5 years, 10 years, 15, 20 years. He's not. He doesn't give a shit. I mean, he may say he does, but he doesn't really care because that's not what his models are doing. And so, he's skating to where the puck is, not where the puck's going. And that matters quite a bit. Now, I will say this. There are a few structural impediments that that have to get over. We have just lived through what are we at? I don't know how many months, 8-month period of time where one of the structural impediments has to be overcome, which is distribution. Bitcoin cannot become a global store of value when it is dominated by whales that bought it before 2011. Just can't. Mined it before 2011. You just can't. You can't have Bitcoin billionaires be the new robber barons who control the entire world and have everybody else clamor at their feet. You need these people to start selling and let it broaden out. And that is something that's been happening. And that is a very painful process because what's going to happen? Once they start, they sell until the price goes down. And then they stop and then the price goes back up. And it's like, let's wait for it to go a little bit up higher next time. And so cycles are born. And whether you call the 4-year cycle dead like I do, because it's bullshit to talk about 4 years and the way it'd be around the halving now, but there is still a cycle that has to play out of Bitcoin rises, OGs sell, flatten out, rises, sell, whatever. And whether you call that the power law, however you want to call it, there's lots of different ways of looking at it. It is a necessary type of cycle that has to happen. That's thing number one, because it needs to be distributed. It can't be in the hands of people who are just zealots and holding it forever. In fact, at a certain point, the notion of hodl at the extreme would damn Bitcoin to failure. Now, that said, as a smart investor, if you think something is 95% undervalued, selling it is stupid. And so therefore, you get to the second problem, which is right now, Bitcoin is taxed in most jurisdictions such that if you sell it and then buy more, you have to pay capital gains on what you sold. So that's true in the US. So now, take me. I have N number of Bitcoin. It's not a huge amount, but it's enough that, I'm a whole coiner. I'll say that much. But not, I'm not Grant Cardone. I'm not selling houses. I'm not, whatever. Why would I sell even a Satoshi when I have to pay capital gains taxes for my cost basis under 10,000? The answer is I wouldn't. It would be stupid to do so because I would have to pay all of that. So until there's a way to spend Bitcoin, it's not without capital gains implications. It won't get used as currency. My bet is it won't happen until such a time as it's done going up. Or, so Bitcoin therefore won't become a currency, but be an investment until it gets to some equilibrium somewhere at today's prices around, with gold where it is, at around 1.4 million. At which point, then it could be used because then anything is probably just moving with the money supply. It could still go up, but it's not necessarily just going up because it's undervalued at that point. So you have to understand those are two very important dynamics.
Yeah. Yeah, makes a lot of sense. So if you had to look at the future, let's say we look at 10 years from now, what is one thing you think will have happened by then, or will be the case by then, that people would say is crazy today?
Well, crazy, I don't know about that. I'd say that my view is that Bitcoin will go to its next level of acceleration towards digital gold within 3 to 5 years from the time that it's fully integrated into the financial system, meaning that Bitcoin is treated based on the same way as other assets as collateral, i.e. based on its volatility and its volume. Its volatility and liquidity. I think that will be the trigger for the next big move up. And whether that gets to 3/4, half, or full, what gold is worth at that time, I don't know. But that'll be the trigger for the next big bull market. That doesn't mean we can't grind higher towards that on the way as it becomes more and more obvious, but I think that's a big deal. When you start talking 10 years out, you're starting to get close to where I think it becomes likely that this sort of thing happens. The last time I was asked about a prediction in the future was back in 1990 about when would markets get fully electronic. And that had to do with the fact that people made a lot of money by markets being inefficient. I would feel more comfortable in saying this about DeFi and when it will become really prime time in the financial system. And there, I would say 10 to 15 years is sort of what I was thinking. I think Bitcoin's going to be more cyclical and in pieces, but we'll get there. So whether it's 10 years or 15 years, I'm much less aggressive in my thought process than Saylor. I think that he just assumes up only. You have to look at the corrections and the distribution and what happens. But 10 to 15 years is sort of my time for Bitcoin to be accepted as in the same sentence, certainly beyond silver. And Bitcoin was above silver not all that long ago. I think silver has some reasons why it's going to continue to go higher, but that's structural because of industrial demand. But I think Bitcoin becoming actually a piece, something that is in the same conversation as gold and is more correlated to gold than it is to a tech stock, that happens in the next 10 to 15 years.
Yeah. Is there something you would want to add to kind of what we talked about in this conversation that you think we've missed that is important for people to see, or a big topic for you?
Yeah, so the big topic is ease of use and safety and security. There are people in the Bitcoin world who say, well, it's very easy to use. You just spin up a wallet, you memorize the 12-thing seed phrase, you stick the seed phrase or half of it in one safe deposit box in one country or one locality, and take the other half of the seed phrase, put it someplace else so no one thief can get it, and make sure your hardware wallet is separate from that, and you keep it air-gapped, and when you want to move something, you follow this sort of procedure or that procedure, etc. I don't know about you, Bram, but every time I open up a ledger and I do something and I see the pit in my stomach when I hear your software needs to be updated. I mean, that's like a huge fear. And I have a very small percent of my wealth on any individual ledger. But Bitcoin will not become a global store of value with a UI UX that requires grandma to open up a computer ledger and start typing in, passphrases and memorize seed. It's just not going to happen. So there has to be a better way. And honestly, what has happened in this world is the better way, one way or another, or a different form of intermediary. I mean, nobody gives a crap how this thing works. That's my old colleague and my now still alive old Jack Russell, when she was young here. But no one cares how this thing works. It is do it. They trust Apple. You put your face on. Everyone knows Apple knows your damn face. Ever wonder why you're talking with your wife about a product and you go on some website and bam, you're served something from that ad? Why? Because your phone's listening to you. So all the people who say that the average human being is going to be paranoid about safety, no, they want a trusted intermediary that they know isn't going to screw them, or that they have recourse if they can trade. And to me, that's where the Bitcoin community needs to go. Now, the ETFs go part of the way there, but the ETFs don't give you the full maneuverability. You can't move it in and out. So look, there's a long way to go. It's light years better today than it was 5 years ago. And it will be light years better in 5 years. But understanding that it becomes the kind of thing that everybody can use if they want will be great. Now, my friend Carlo just published a book. It's a free book that he published. It says, "Make your wallet your own bank." And he's talking about how to help people do that with better technology. And as AI and vibe coding and everything comes in, all this is happening at the same time. Mm-hmm. So I see a bright future, but we're not quite there yet. And so anytime people say, well, why isn't it already happening? Well, the answer is because it's not already happened.
Yeah, that's a good one. I like that. All right, to wrap up, I want to ask you a question that I ask everyone at the end of each conversation, which is, what is a core belief that you will never let go of?
My most important core belief is how important freedom of speech is. I would far rather let people say things that I find offensive and be able to argue about it than hide from that truth. Because when you hide from that truth, it drives it underground and people start believing it. So the fact that people are afraid, for example, today to debate what's going on with anti-Semitism, anti-Israel fervor, et cetera, is a big problem in my mind, a very, very big problem, because it has created the Tucker Carlsons of the world to be able to get away with things because such subjects are effectively either taboo or not discussed. And so he could say things and create enormous problems. The worst ideas, the worst racism going back, decades happened because you weren't allowed to talk about race. And so we end up with all sorts of things. The entire DEI system grew up around the fact that you couldn't talk about it. So I genuinely believe that freedom of speech is incredibly important. It's a very core value of mine. You probably weren't expecting such a well thought out answer, but it is something that I care about quite a bit for many, many reasons. I'll leave you with this. When I was in college, I, as a Jew, worked with the ACLU on the amicus brief that they filed for the Nazis to be able to demonstrate in a Jewish area. Now, was that because I supported the Nazis? Of course not. Most of what the Nazis say is incredibly stupid, and it's far better for people to hear incredibly stupid stuff so they can say, wait a minute, that's really stupid, than to say, oh, you're trying to block them, they must be up onto something. And so that is my core belief.
Yeah, thanks for sharing. I mean, I ask it everyone because everyone has a different answer, and sometimes people are taken aback and they have to really think. Other people like you had your answer straight ready. So for me, I think it's just a fun question to wrap up.
Yeah, no,
with.
It's important. It lets you know where people are coming from. I mean, Look, I'm happy to be proven wrong when I'm wrong. I mean, you mentioned Luke Gromen. I was wrong when he said that he talked about coming out and Bitcoin was at 90,000. I thought that it had bottomed from 126. I was wrong. He was right. Mm-hmm. Right? That's fine. I admit it. I have no problem with that. Anyone who thinks they're going to be 100% right all the time, generally are the ones that are the most dangerous people to follow.
True. All right. Well, I want to thank you for your time and your insights. I think people will find this valuable, and we're going to see how it goes. Let's stay in touch and do this again sometime. Thank you.
Thanks, Bram.
Cheers. I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, if you want to help me shine a light on the message of Bitcoin, please like this video and subscribe to stay connected. I hope to see you for our next episode. Bye.